I am using this format to give you maximum content in minimum time. Now let's understand, what are the deductions anyone can claim from income tax? Either the investment made, or the income received on the investment, or both, can be deducted, usually up to a certain limit, from the taxable income. In other words, the income on which tax will be calculated gets reduced to the extent that some income is received or investment is made. There is a list of eligible investments provided under Section 80C. Investments in these instruments made up to a maximum limit of 150,000 rupees in a financial year, are available as deduction. The Income Tax Act allows certain deductions that can be claimed for certain expenses or payments made by the assessee from his total income. Deductions that can be claimed by an assessee are covered under Chapter 6A of the Income Tax Act. Section 80C allows for expense incurred under certain heads or investments made to be deducted from the total income. 100% of the amount invested or 150,000 rupees, whichever is less, is available as deduction from total income. A. Life insurance premium paid towards life of self, spouse or any child in case of an individual and members in case of a Hindu Undivided Family. B. Payment towards a deferred annuity contract on life of self, spouse or any child in case of an individual. C. Contribution towards statutory provident fund, recognized provident fund, approved superannuation fund. D. Contribution towards Public Provident Fund Scheme, 1968 in the name of self, spouse or any child in case of an individual or member in case of HUF. E. Term deposits for a fixed period of not less than 5 years notified for this purpose with any scheduled commercial bank. F. Subscription to the NSC, VIII Issue. G. Contributions made to the Sukanya Samriddhi account scheme. H. Subscription to units of mutual fund equity-linked savings scheme notified by the central government. I. Contribution by an individual to any pension fund set up by any mutual fund referred US 1023D. J. Subscription to any such deposit scheme of National Housing Bank, NHB, or as a contribution to any such pension fund set up by NHB as notified by central government. K. Subscription to notified deposit schemes of, a. Public sector company providing long-term finance for purchase/construction of residential houses in India or, b. Any authority constituted in India for the purposes of housing or planning, development or improvement of cities, towns and villages. L. Tuition fees, excluding any payment towards any development fees or donation or payment of similar nature, to any university, college, school or other educational institution situated within India for the purpose of full-time education of any two children of individual. M. Towards the cost of purchase or construction of a residential house property, including the repayment of loans taken from government, bank, LIC, NHB, specified assessee's employer etc., and also the stamp duty, registration fees and other expenses for transfer of such house property to the assessee. The income from such house property should be chargeable to tax under the head income from house property. N. Subscription to equity shares or debentures forming part of any eligible issue of capital of public company or any public financial institution approved by the CBDT. O. Term deposit, fixed deposit, for 5 years or more with scheduled bank in accordance with a scheme framed and notified by the central government. P. Subscription to any notified bonds of National Bank for Agriculture and Rural Development, NABARD. Q. Account under the Senior Citizen Savings Schemes Rules, 2004. R. 5-year term deposit in an account under the Post Office Time Deposit Rules, 1981. Section 80CCC allows deduction from total income for a premium paid for an annuity plan of LIC or other insurers within the overall limit of 150,000 rupees. Premium paid on health insurance policies is allowed as deduction from total income, within the limits specified by Section 80D. Section 80DD allows deduction on expenses of maintenance of disabled persons up to a limit of Rs. 75,000 or 125,000 rupees depending upon the severity of disability. Section 80DDB allows deduction of the expenditure on medical treatment for the assessee or dependents for specified diseases such as neurological diseases, renal failure, cancer, AIDS and hematological disorders up to a limit of 40,000 rupees. In case of senior and very senior citizens, the limit for deduction is 100,000 rupees. Section 80E allows the entire interest paid on education loan as deduction from the assessment year relevant to the previous year in which the assessee begins paying interest and 7 subsequent years. Section 80G allows all assessees to claim deduction up to specified limits for contributions made to charitable organizations. Section 80GG provides deduction to an assessee not receiving HRA for rent paid by him up to specified limits. Section 80U allows deductions for persons with disabilities of 75,000 rupees for normal disability and 125,000 rupees for severe disability. Section 80TTA provides deduction for interest earned from savings bank account up to a limit of Rs. 10,000. Section 80TTB allows a deduction of up to 50,000 rupees in respect of interest income on deposits earned by senior citizens. If deduction is availed under this section, then no deduction under Section 80TTA will be allowed. Section 16 allows a standard deduction of 50,000 rupees. The deduction is allowed irrespective of actual expenses and no bills or proofs need to be submitted to claim this deduction. 4. Financial planning. Wealth management. SIP mutual fund. Contact now.